See, in a lease contract, it's always possible that we may introduce changes at a subsequent stage. Whatever were the original terms and conditions on the basis of which we had negotiated the lease contract, those terms and conditions can undergo a change. We may increase the scope of the lease, we may decrease the scope of the lease, there can be a change in the lease term, there can be a change in the consideration. A lot of things are possible over the lease term. These changes that we are making in the original terms and conditions of the lease, we call it as lease modification. So let us understand how lease modification can be accounted for under Ind AS 116. Yeah, we are discussing the points of lease modifications. It says a lease modification is a change in the scope of a lease or the consideration for a lease that was not part of the original terms and conditions. Today you and me are entering into a lease contract. Today we are negotiating what should be the terms and conditions. But see, it is not necessary that these terms and conditions are agreeable for the entire lease term. A lot of things can change over a period of time, and hence we may like to make certain changes in the lease agreement. What are the possibilities? They are saying the following are the examples of lease modifications that may be negotiated after the lease commencement date. Okay. The first possibility is a lease extension. You may enter into a lease agreement for 8 years and now you want to extend it. So let us say you want to extend it by another 4 years and the total lease term will now become of 12 years. So today we sign the agreement for 8 years. 2 years down the line, the lessee feels that no, I will need this particular asset for a longer duration. You can always increase the lease term. Or the opposite of that, there can be an early termination of the lease. So you may enter into an 8-year lease, but now you want to reduce the term to 5 years. So this is also possible. A change in the timing of the lease payments, right? The lease payments are being paid at year end. We want to now change it to year beginning. Leasing additional space in the same building. So you have entered into a lease agreement. Let us say you have taken an office premise on lease. Let's say you have taken some 1500 square feet and now you want to add another 1500 square feet. You are planning to expand your business. You require the adjoining, right? You want the adjoining office also. So you are leasing out additional space, but yes, it should be important. It should be in the same building. Surrendering a part of the underlying asset. So that's again opposite of what we were discussing earlier. You have entered into a lease contract for 3000 square feet. We want to reduce it now to 1500 square feet. So we are surrendering a part of the underlying asset. Now, what should we do whenever a lease is getting modified? Okay. Whenever you are modifying a lease, you have to again check whether lease is existing or not. See, we know that at the inception, we are supposed to check whether the contract is containing a lease. So whenever you are making any modifications in the lease contract, whatever is the modified contract, again assess the modified contract and come to the conclusion that does the new contract still has a lease. It should not happen that the terms and conditions of the lease has changed to such an extent that it is now no longer a lease contract. It might have become a supply contract. So that's the reason we should first check whether the lease is still existing or not. So if a lease is modified as stated above, the modified contract is evaluated to determine whether it is or contains a lease. If a lease continues to exist, then lease modification can result in two. Let's say we come to the conclusion that no, the contract still has a lease. Then there are two possible ways of accounting the lease. You can consider the revised lease, or I would say the modified lease, to be a separate lease, or whatever accounting you are doing of the existing lease, that accounting needs to be modified. So either it will result in a separate lease or it will change the accounting for the existing lease. In other words, it's not a separate lease. So terms and conditions of the lease agreement are altered. Check does the contract still has a lease? Answer is yes. Now there are two possibilities. Either the modified lease is a separate lease, or the modifications are such that we have to simply change the accounting of the existing lease. Okay. So when shall we treat the modification as a separate lease? Let's understand that now. A lease modification is accounted for as a separate lease if both of the following conditions are fulfilled. A. The modification increases the scope of the lease by adding the right to use one or more of the underlying assets. So this is very crucial. Modification should be such that it is increasing the scope of the lease. Remember this. Separate lease will be possible only when the modification is resulting into increase in the scope. By chance, if the modification is resulting into decrease in the scope, you have to simply not check over here. It will never be accounted as a separate lease. Separate lease will be possible only when the scope of the lease is increasing. And B, the consideration for the lease increases by an amount commensurate with the stand-alone price for the increase in scope. So two things should happen simultaneously, right? The word used is and. You should be increasing the scope of the lease, and the consideration should also be increasing in such a way that it commensurates for the increase in the scope of the lease. So let us say you have an office premise right now of 1500 square feet, and in the same building, okay, in the same building, you are now planning to take another 1500 square feet. Let us assume that it's an adjoining office. You have cleared your chartered accountancy. You have now taken an office on rent. You want to start with your practice. So you have taken on rent 1500 square feet of space. Okay. After 2 or 3 years, let's say a few of your other friends are also joining you. And that proprietorship that you had, you are now converting it into a partnership firm. You realize you will need more space now. The adjoining office is vacant. So you are taking the adjoining office also on the rent. So what you are doing is you are increasing the scope of the lease, isn't it? The scope of the lease has increased. Just see, the first condition is getting satisfied. The modification is increasing the scope of the lease by adding the right to use one or more of the underlying asset. So we have increased the scope. So condition A has got fulfilled. What is condition B? Condition B is that whatever additional lease rent that you will now pay for the extra space, this additional rent should be at its stand-alone price. In other words, you are not sitting down with the tenant, you are not sitting down with the owner and trying to design a package deal where a substantial amount of discount is available to you. No, we are not really doing any such thing. So let us say for this 1500 square feet, let's assume for a moment that the going rate of rent, let's say, is 30,000 rupees per month. Just an hypothetical example, that it is 30,000 rupees per month. After 2 years, let us say, after 2 years, the conditions are such that for another it is 35,000 per month. You are agreeing for 35,000 rupees per month. You are agreeing at the stand-alone price. So the consideration for the lease is increasing by an amount commensurate with the stand-alone price for the increase in the scope. Then condition B is also getting satisfied. When both of these conditions are getting satisfied, this 1500 square feet, understand this, this 1500 square feet will be accounted as a separate lease. In other words, whatever accounting I am doing for the original lease, right? Let me consider this as the original lease. Whatever accounting I am doing for the original lease, that accounting will continue. I will not disturb it. And I will consider as if another 1500 square feet, it is a separate lease. And I will do separate accounting for the same. Very quickly, when will you do separate accounting? When will you treat the modification as a separate lease? First, it should be increasing the scope of the lease, okay? And second, whatever is the increase in the lease consideration, it should be commensurate with the stand-alone price. We are not negotiating a package deal over here. Whatever is the going rent, whatever is the going rate of the rent, we are agreeing to it. If both of these conditions are getting satisfied, then one will feel, right? One will feel that this 1500 square feet is nothing but a new lease contract. So account for it as a separate lease contract. So just see, old leases continued to be accounted as usual. Old lease or original lease, whatever you say, the increase in the scope is accounted as a separate lease. If these two conditions are not getting satisfied or any one condition is not getting satisfied, remember, you will have to modify the accounting of the existing lease. So if a lease modification fails the test above or the modification is of any other type, the lessee must modify the initially recognized components of the lease contract, right? So what can happen over here is something in this way. You already have 1500 square feet. Understand this, you already have 1500 square feet. You are paying, let us say, 30,000 rupees per month. I want to take another office of 1500 square feet and the going rate is, let us say, 35,000 per month, isn't it? So this is the going rate. This is nothing but the standalone price. But what we do is we negotiate with the lease, with the lessor. We tell the lessor that, see, we are expanding and we want another office premise. We are ready to do it, so provided you are giving us a good deal. You know, here the total is turning out to be 65,000 per month, but I'm able to negotiate a combined lease rent of 55,000 per month. I am able to convince the lessor that if you are charging 10,000 rupees less, then we will take your office. But if you are going for the going rent, if you are saying that no, right now the rent is 35, that is what I am charging, then we will surrender the existing lease also and we will think about shifting to some another premise. See, this thing is always there, right? This possibility is always there. You can always move away to some another building if a better rate is available. So this is what you are suggesting to the lessor, that see, this is what we can really do. If you are giving us a good deal, then we'll take the adjoining office. Otherwise, we are even surrendering, right? We are even surrendering what we have right now. The lessor, let us say, agrees and says that, okay, you pay me 55,000 per month. I don't have any problem. So you can see the scope is increasing. Scope is increasing. Condition A is getting satisfied, but the lease consideration is not increasing at the standalone price. If it was increasing at the standalone price, it should have been 65,000 rupees per month, but I could negotiate a package deal. So what happens is, because you have gone for a package deal means you are negotiating for the two of them together. If you are negotiating for two of them together, then how can you say this is a separate lease? It's no longer a separate lease, isn't it? It is not a separate lease, because this 1500 square feet, which is new office space, it has been negotiated with the existing 1500 square feet. And that is the reason we will have to treat this as a modification of the existing lease. So this is a summary that we can really prepare. Lease scope is increasing. Understand, consideration for the lease is increasing by an amount commensurate with the standalone price. We will treat it as a separate lease, right? Lease scope is increasing, but the consideration for the lease does not increase by an amount commensurate with the standalone price for the increase in the scope. Then I cannot treat it as a separate lease. Similarly, the lease scope is the same, but consideration changes. Then in that case also, we will not treat it as a separate lease. Increase in the lease term, right? Increase in the lease term. Condition A and B is not getting satisfied here. The scope of the lease is not increasing over here. It's only the lease term which is actually increasing. So in all these cases, you are not supposed to treat it as a separate lease. Rather, whatever is your existing lease, that existing lease needs to be modified. So on the date of modification, you should find out what is the revised lease liability, and whatever is the changes in the lease liability, that should be accounted through changes in the ROU asset. Of course, it will become more clear when we will solve the question, but this is the kind of treatment which is needed to be given. We will have to remeasure the lease liability at the modification date. Since your lease consideration is changing, since the scope is changing, since the consideration may be changing, right? Since the lease term is changing, your lease liability will undergo a change. So you should remeasure the lease liability. And as I said, you should give its effect by adjusting the ROU asset. So we say we make corresponding adjustment to the ROU asset. And finally, lease scope is decreasing or the lease term is decreasing. Here there can be a partial or complete termination of the lease contract. If there is any partial or full termination of the lease contract, there can be some gain or loss. This gain or loss will be recognized in the profit and loss account. So what we do here is we say de-recognize the lease liability and the ROU asset to reflect partial or full termination of the lease. And because you are terminating the lease, there can be some gain or loss. This gain or loss should be recognized in the profit and loss account.